Good morning, everyone. It is Tuesday, October 11th. Going to run through the morning charts and recap what unfolded yesterday. Yesterday was Canadian Thanksgiving, so I was away. Anyways, I'm going to catch up with the morning charts here today. Overall, yesterday we saw the stock market have a very big gain, and we saw momentum, which was somewhat overbought, continue to push into that overbought zone. And if we just look at this momentum, a chart right here showing plus 3.71. I'll show you where we fall on that chart here as in terms of overbought and oversold. I consider anything to be above 101 to be overbought. Of course, we've been in some recent very volatile times, and it kind of blows these limits out of kind of whack. But overall, you got to keep them in mind. And you can see anything above means the market's generally overbought for the day. Usually you'll see it pull back for a couple days afterwards. When you get a dip to the lower below these levels, you usually anticipate the market to have a bounce. Now, since we've had the correction in the market and the sideways chop, we've seen extreme volatility, but it's still the same. Once we see a large stretch outside of the norm, we know we're overbought or oversold. So as of yesterday with the strong close, we closed up here at the 103.70, which shows us way out of whack in an overterm point of view. Generally, it means we're going to get some type of pullback or pause in the market. We can see the market trade sideways, and we'll see this indicator actually come right back down into the middle of the zone. So it doesn't indicate you're going to actually get a price move down. It just means that it's overdone, and you could actually see the stock market just trade sideways or taper down a little bit while this indicator falls back down. And once it's back down into the medium, then you can see it continue to extend. So you don't necessarily look for the market to pull back. All you're understanding here is that the market is overbought and it needs a rest before it'll have energy to move back higher. Now, taking a look at the overall sentiment using volume analysis, just let this page load up here. Here we can see we have the advancing and declining shares for the NYSE, and pretty much yesterday you can see there were pretty much 10 buyers to every one seller, so there weren't really many sellers at all. Everybody was piling into the market, more or less like a short squeeze almost, and I'm going to cover that in a little bit. But when everybody's piling into the market, usually you're a little bit overdone, but there are times when everybody's piling into the market where it could actually be a shift in a trend from a downtrend to an uptrend. And again, I'm going to cover that in a couple more charts here. Let's start off with the US dollar index. This is the 60-minute chart. And last week I drew this support trend line that we had going across here. We had the three surges to make new highs, and I pointed out that this trend line is going to be a pretty key level to see what happens at this point. If we get a nice bounce, which was in favor still because the trend was up, then we're going to see equities continue to fall and break down. If we see the US dollar break down, which is what it did, then we're going to see equities want to rise. So the fact that we've broken down out of this pattern, we're starting to come up. We may form some type of rising wedge, something more bearish here, which would actually start to put in a head and shoulders pattern. And then from there, we'd have more or less a neckline here and a break to the downside, which would probably give us one, two, somewhere down around almost a 75 target if the price starts to break down. And of course, that would kick off a huge rally in stocks and commodities. So the key is now that we've broken this support trend line, we want to see the price pattern in the US dollar index, how it plays out over the next few days, and we may be looking to short it and actually be going long the equities market now that we're actually seeing a shift in some investments here. Taking a look at the oil chart and what happened yesterday, again, a weak dollar means strong commodities, and that's exactly what we saw. Crude oil pretty much came down, made a new low about a week and a half ago, and yesterday it ripped to the upside, and it did pierce a previous high. And the fact that it did it on solid volume and in a nice big move, now that we've pierced it, I wouldn't be surprised if we see it come back down a little bit and kind of regroup and this leg here, usually when you break an external leg here, you're going to see it's called an impulse, and we'll likely see it pull back, take a breather, and then it could actually continue to run higher and work its way up. So that's kind of what we're looking for now, is possibly looking for a pause or pullback in the market, stocks and commodities, and we'll be looking to possibly buy the actual dip for a trend reversal to the upside. Looking at gold, gold continues to form a somewhat bearish pattern in my point of view here. We've got a rising, let me just grab this trend line, we've got a rising wedge, and this isn't a very healthy pattern in my point of view. We had this in crude oil, and what we did, we actually let it continue to play out, and we actually, similar to crude oil, we'd be shorting it somewhere up here, and then we saw it collapse right down for a double bottom, and since then crude oil just pierced that low and is now bouncing back, trying to form a base here. So overall, gold still has a bearish pattern in my point of view, and the trend is down. We got a rising wedge, which is bearish, and I could see a double bottom. Not that anybody really wants to see that happen, but I could see a double bottom coming in for gold, which would happen very quickly if it does take place. The fact that we've got this rising bottom trend line here, and there's a lot of people piling in the long positions. Once it starts to break down, we're going to have pivot lows with protective stops underneath them. And once they start to sell off, there's going to be a sharp drop in gold if that selling starts. We'll have to see if it can break out of this pattern with some type of bullish commitment behind it. Then we'll be actually looking to play more of the long side. But right now we've seen prices rise, we've seen volume decline, and that is not usually a good sign for higher prices. It usually means it's running out of steam, and it's just kind of spending more time in the upper range trying to suck in more longs before it drops. Looking at the silver chart, this goes back a few months. You can see we've more or less got that same pattern I pointed out several weeks ago. We're just trading between the high and the low of the major whipsaw day that we saw there, and it's just kind of digesting what's going on. Overall, I'm still a little more bearish on silver. While it might not make a new low, it could come down and test these lows, or it could come back down into around the 29 area and kind of taper back down over the next little bit. So we'll just see how things play out there. As for bonds, which has been the safe havens for quite a while, just continuing to rise, we've seen it start to become very choppy, and the fact that we have the big gap up and a big surge followed by a sell-off, another run to a new high, and another sell-off, starting to look very much like a topping pattern. And the fact that we're getting a shift in the US dollar index, I think, is kind of leading the way of what's going to happen here, and where the money is going to be flowing from stocks to commodities and out of the safe havens. So what I'm looking for here is either a breakdown and then some type of relief kind of fade back up, which we'd be looking to short at a resistance zone, or we want to see some type of a bounce with a bearish characteristics, which will be more of just a drift higher on declining volume, and we'd be looking to short up here. We could also see it push up to a new high, and depending how that plays out, I don't really want to short a new high, but I'd be more inclined to wait for either, let me just clear this chart here. If we do get a new high in bonds, then I'd be waiting for either a breakdown and some type of test back up to that level with some type of rising wedge, and then be shorting it here. So I'm not really looking to try and pick a top. If other investments are all lining up that we're seeing a major shift and a trend reversal, we may end up looking, if it does come back up to a new high, we may actually take a small short position, but everything else has to be in line. Other investments showing that we're at a key pivot point, but if we don't see that, then we don't want to be trying to pick a top. Now looking at the long-term chart of the SP 500, we do have some pretty extreme stats in the market. If I was to just go to this is back in 2006, 2007, 2008, and back in 2006 we had right back in here we had some of the highest short sale levels that we've seen, meaning a majority of traders are short. not the majority, but a very large percentage. And that's what we're seeing right now in the market. We're seeing a similar level to what we saw back here in 2006 when everybody turned really bearish. And the reason why everybody was bearish, because if you zoom back, you can see the huge run that the market had put in, and everybody, the fact that it had ran for so long, and I don't know why this chart isn't sticking here. Anyways, we ran all the way up here. Market started to try and roll over, and we were up into a key pivot zone from a previous high here and several pivot lows here, and everybody became bearish. You can see the volume spiking, and the majority of traders started shorting every bounce. And eventually, because there were so many people shorting it, eventually you got a short squeeze out of that position, and it actually led to a major, let me just zoom in a bit here, it led to a major rally, about a 40% gain in the market in the next year and a half. So it was a huge move to the upside, or a 35% gain, somewhere in there. And that's kind of where we stand right now. If I just fast track to today's price action, you can see from the '09 lows, we've had a huge move up. We've had a breakdown. Everything is starting to look bearish, and we've got volume picking up. And the fact that everybody is as short as they were back in 2006, it indicates once we do break out of this pattern, we're going to see an unwinding of those shorts, meaning everybody's going to be covering and likely taking a long position. So we're going to see a huge volume surge to the upside, and we could see a very nice extended move, and we could see another bull market play out here. And I've been anticipating that. I did a report on it last week on the showing the DAX, how the DAX was trying to put in a bottom, and it could take a few weeks to unfold. For all we know, this could be the start of it already, and it's happening a little quicker than I thought. But either way, the market sentiment has been showing that we're at extreme panic selling. Everybody's become very bearish on the market, and that usually is a signal that we are nearing or putting in a bottom. Also, the amount of bulls versus bears, we've got about 34% of the market that is bullish on the market, which is very low, and we've got 45% of traders who are bearish. And those levels combined make a very bullish statement for the market, showing that there just isn't any confidence. And each time we've seen readings of this level in the past, it has signaled a pretty major bull market low. So that's kind of where we stand right now, and we're going to see how things play out. And with any luck, we'll end up with a long position in the next few days in the equities market. Now, taking a quick look at the SP 500. This is a 10-minute chart zoomed out about 2 months. And the reason why people are so bearish on the market is simply because we are in a downtrend. We've seen some strong selling. We've seen some sideways chop in the market. And overall, we're trading up into a key resistance zone as of yesterday's close. We're into these previous peaks. The market's overbought. Really what we need to see, we did break this previous pivot high. So we've got a nice impulse move to the upside. The question is, are we going to continue to see more short squeeze, and we're going to see this maybe break right out of all these patterns, and from there actually put in some type of pause where we'd be looking to go long and catch another major trend to the upside. So right now, the fact that this whole market here overall was rounding out, and you could see it just kind of starting to round out. There was great potential for another big move to the downside, and again, we're playing with the trend. I'm not trying to pick tops and bottoms. I'm playing where the odds are pointing to. The fact that we had a resistance level here, we had previous lower highs, the overall trend was down. We had a great short entry. Unfortunately, we're getting a big pop, and this could actually be the bottom put into the market here, and we could see a major rally going forward. So the next couple days, it's going to be important to see how the market plays out, and we're going to work our way and position ourselves to get in on the next trend and make some more money. Anyways, that's it for now, and I'll talk to you in a bit. Bye bye.